Okay, it's finally time for me to talk about GameStop, or GameStonk, as Elon Musk called it yesterday, and that's really what made me think, boy, I have to get to this at some point. I've wanted to for the last couple of days, but there's been other stuff going on, and now I think that things have gotten crazy enough to where I cannot ignore this anymore. I mean, after all, one of the things that I used to discuss most on this channel was the insanity of financial markets in this country. And so I will not go over explaining the background on GameStonk. I think that everybody understands now how it started with the joke on, Wall Street bets on Reddit, and people going, oh, gee, wouldn't it be funny if we all went and bought this at the same time and, sent it through the moon? Because if this story really was just about GameStop, that one stock, then I wouldn't find a need to really address it. In my time talking about financial markets on this channel, I've almost never focused on a single stock for an entire video, because I just don't think that that's relevant. That's not really in my wheelhouse. I think more in terms of macro. That's what interests me, and that's what I think is the most applicable to the lives of ordinary people. Because I do not think that this whole GameStop or GameStonk phenomenon is an anomaly. I think that this is a very clear symptom of the rot in the system. This is not something that at all shocks me, because I have been watching what can only be described as clown markets for years now. You can say just about every stock traded on Wall Street, is going up irrationally. The Nasdaq is up something like 200% in the last 12 months. That's absurd. There's no reason why the Nasdaq should be up that much. There's no reason why the stock market is at record highs when we are in a supposedly crippling economic depression brought on by a global pandemic that everybody's dying of. Our economy relative to the to the stock market is not growing. It's shrinking. Market cap to GDP is at like 200% now. Something normal, a normal range is like 50 to 75%. I.e., the value of all the stocks traded should not be bigger than annual GDP. Stocks have been absurdly high for a long time, so it's not significant that one stock in particular all of a sudden shoots up and gets absurdly high, because this can happen to any stock. The vast majority of stocks on Wall Street are ridiculously high. Tesla is absurd. There's no reason why Tesla is worth as much money as it is from a rational standpoint. It's all in principle the same as what's been going on with GameStop. It's people who have money to put into these things, and they're just looking for anywhere to shove their money in hopes of making a quick buck. The Fed has been dumping billions and billions and billions of dollars into financial markets in the hopes that people would just go in there and spend money on stocks and on bonds, even if it didn't make sense to buy them, at the current prices, and just make them go up. That's been the Fed's stated policy. Jerome Powell and Janet Yellen, who is now the Treasury Secretary, the former Fed chair, should be thrilled. They should be very happy, because what happened with GameStop is an example of Federal Reserve policy, of U.S. government policy working as intended. Now, I know today that overall the stock market is down, and the stock market does have down days from time to time, but the down day of today did not make a dent in all of the irrational gains that have been made over the past few years. The stock market in no way is anywhere near coming back down to earth, which would be somewhere like a market cap to GDP of, as I said, 50 to 75%. Yet for some reason, the likes of the Wall Street media and the big Wall Street players are apoplectic that GameStop is so overvalued. And it's really quite obvious why. They're not at all concerned about the bubble in the overall stock market, in the bubble in other particular stocks. They're only, for some reason, worried about the bubble in GameStop. And that is because they're not the ones making all the money. They're the ones feeling the pain. Ordinarily, when stocks go up for no particular reason, they're the ones making the money. But in this case, I guess a lot of people on Wall Street, well, I guess everyone, not everyone, but quite, people were shorting GameStop. And unfortunately, I think some of the less savvy people who are following this story are making it about, short sellers versus, regular investors, as if the problem here is short selling. Whereas it's quite the opposite. It's kind of a coincidence that this happens to be one of the very few stocks that actually gets, is getting shorted. Because if we're looking at this, in terms of the, the monetarist idea of the rational investor, the whole market should be getting shorted heavily right now. But anyway, I keep getting off on tangents. All of Wall Street, with one major exception, which I'll get to in a minute, was net short GameStop. And when all of a sudden GameStop went to the moon, these people had to start covering. They had to, they were losing billions and billions of dollars. Well, I shouldn't say billions, losing millions, I think, because we're not exactly sure how much these people had invested in all. Though we don't know exactly. And I don't want to get too much in the weeds about the mechanics about how all of this works. But I mean, what really the people on Reddit did was they kickstarted this whole event, because once you reverse the trend on a security like a stock like GameStop, you set a lot of other things in motion. So, for example, all those shorts, they had what's called stops, and those are points at which, hey, I've lost so much money, I need to just get out of the trade. They need to buy, they have to cover their short, meaning they have to go into the market, they have to buy GameStop, and so that they can get out of that trade and stop losing money. And so once they started boosting up GameStop, through this organic retail investor attack, let's say, on the shorts. It's a short squeeze in Wall Street parlance. All the shorts had to come in and start covering, and so that just boosted GameStop up even higher. And then, of course, you have all of the options brokers having to come into the market to buy GameStop to fill their call options contracts, because well, I guess I'll explain how a call option works. You can buy a contract with a broker saying, hey, I want, I'm going to buy the right to buy GameStop at, I don't know, $10 a share, and this is good. You have to sell me this many shares of GameStop at this price until this date. I have the option to buy them until the end of the month, let's say. Well, as GameStop, goes to the moon, then a lot of people are going to, who own those options contracts are going to come in and they're going to say to the brokers, hey, I want to buy GameStop at $10 a share, because then they have all that extra profit, however much GameStop stock is worth over what they have to pay the brokers for it. To them is all profit, and of course it's a loss to the broker. And those people who originally sold those call options, they have to go into the market to buy more shares of GameStop to fill those contracts. And so that's what's created this absurd momentum that is just going to keep pushing GameStop higher and higher. But as I said, there was one really significant exception to this rule that most of the mainstream of Wall Street was shorting GameStop. Well, apparently BlackRock, the largest asset manager in the world, had a 13% stake in GameStop as of December 31st, 2020, and assuming that they haven't sold any of that in the meantime, they're $173.6 million in GameStop stock would now be worth about 2.6 billion. So it's not all of Wall Street who is getting squeezed on this trade, because of the biggest player on Wall Street apparently has made millions off of this short squeeze. Or did I say millions? I meant billions. And I think obviously none of this is healthy, but it's kind of funny to watch all of the big players, in the financial media. And I wasn't going to mention the guy, but I mean that the piece of garbage, Scott Wapner, who there's so many things wrong with Scott Wapner. He has the worst take on every financial news story that comes over the horizon. And Wapner all of a sudden is so concerned that the price of a stock is rising irrationally. And now all sorts of people are calling for, oh my gosh, we need to shut down free speech when it comes to talking about the stock market. People are not allowed to speculate about the stock market on social media. You can't do that because then people go and they buy stocks and, oh my gosh, that's terrible. We can't have little people talking about this. It can only be us on CNBC who get to have opinions on what stocks you should be buying. Even if the rationale for why you should buy into certain assets is far more ridiculous coming from CNBC than it does from some of these folks on Reddit. I mean, the people on CNBC are not serious people. I think that it's called bubble vision for a reason. And so I don't know where all this is heading, but the market the market's clearly been in a melt-up for a long time now. The fact that we didn't have a major crash back in March, which is kind of when I stopped talking about the stock market, because it became clear that things are just going to go straight up for an indefinite period of time. Kind of got boring talking about it, and this is still a part of that. There is nothing at all out of the ordinary at this point with random stocks going up thousands of percent in a week. If anything, I guess it would look like we're in the late stages of the melt-up. I don't know where things go from here. This is a very upward volatility is just as dangerous as downward volatility. Actually, it's more dangerous because when it's upward volatility, there's no end in sight. At least when things are going down, there's a lot of volatility to the downside. There's a zero lower bound, and sure, you can have negative prices in this world. Unfortunately, we saw that with oil last year. But for the most part, if an asset reaches $0 in value, that's it. There you go. That's the end. The volatility stops there. But when you're going to the upside, when it's a melt up and not a melt down, things can get. Things are even more uncertain. Because what you can end up with is a market that goes to infinity and beyond, as George Gammon would say. For examples of that, I would cite Caracas. Their stock market, a few years ago looked just like ours. And in a few years from now, our stock market might look like Caracas today. Because as the Fed starves people of interest, of yield, in everywhere in financial life, they're going to keep chasing yield by going further and further out the risk curve. Obviously, if you buy a company that has been shorted to hell and is in a dying industry like GameStop, where think about it, the demographic of people who buy video games going to a retail store, it doesn't make sense. I was wondering this just a few weeks ago, like, how is GameStop still in business? Well, here it was no surprise to find out they're not doing well. And so obviously, that's one of the riskiest bets you can take. But as the central bank has suppressed interest rates down to near negative levels, and in real terms they are negative, especially if you have a more realistic rate of inflation in there. People have to take bigger and bigger bets just to break even every year, just to keep their head above water when it comes to investing. And so the melt-up is going to continue. In fact, after all this publicity with GameStop and Wall Street Bets, when the $1,400 stimulus checks start coming in, things are going to melt up even faster. I think that, to a certain extent, the cat is now out of the bag This is being heralded by some as sort of a victory of the little guy over Wall Street. And a lot of desperate people who are about to have $1,400 burning a hole in their pocket are going to be inspired by that. They're going to think that, hey, this is my get-rich-quick opportunity. I'm going to go on Wall Street bets, see what they're talking about. And, there's going to be more of these stocks to where people start talking about it online, and everybody buys it with their stimulus check, and things go to the moon. It starts setting off triggers which keep pushing the stock higher and higher. And so that's why I think this might be a sign that we're in one of the late stages of the meltup, to where we start to see hyperinflation of stock prices. And no, I guess I have to throw in the disclaimer: this is not financial advice. But I don't really talk about specifics anyway, most of the time. So I don't think I would need to give that disclaimer. But anyway, there it is. I am in no way by saying that the meltup is about to kick off and we're going to have hyperinflation in the stock market. That's not me saying you should go buy stocks. Far from it. I don't think anybody should buy stocks because they're ridiculously overvalued. And that, to me, just from the standpoint of someone who has academically speaking, an economic background, it kind of makes my brain hurt knowing that people buy these things. Like, I understand that, yes, all that matters is that the price is going up, but I mean, to me, I'm like, these companies are not worth this. Even though I understand, the momentum is they're going up. It's kind of like it's the simplicity of that, the simplistic genius of that viral, idiotic, vapid TikTok influencer who was talking about how he makes money. He says, oh yeah, I go on Robinhood and I see that a stock is going up and I buy it. And I watch it until it starts going down and then I sell it. And then I make lots of money. And it's like, I watch that, it makes my brain explode. I want to rip all my hair out because there's just zero sophistication there. But we live in clown markets, and so some guy like that is going to be much more successful in today's stock market than somebody who is being very careful and going in and looking at let me find the companies that are doing well, that seem to be stable, that pay good dividends, who have a good product and a bright future. There's zero incentive at this point to invest in good companies, like as if you're actually trying to invest in their business. You're not investing in their business. I mean, all these are just letters on a screen and numbers, ones and zeros in a computer. The stock market is completely divorced from reality. It has been for a very long time. It's just that the unreality, the surrealness of the stock market has always been to the benefit of insiders. And so if we have more cases like this, to where there are more and more of these isolated phenomena in which the mom and pop retail investors are winning and beating out the institutional Wall Street investors, that's going to create a lot of instability, let's put it that way. And I mean sort of socioeconomic instability. I think that you might see a top-down attack on retail investors. I mean, in a way, this almost looks like the beginnings of a financial civil war. And I don't use that term to be provocative. But if the retail crowd is able to really unite their voices and coalesce around a single idea, they have a lot of weight that they can throw around. The amount of retail that has poured into the market over the last couple of years is obscene, in my opinion. I think that they're coming in to an already overinflated market, but the fact is they are big players in this market. And if retail investors can stand united and act as a unit, they can have an incredible effect on not just individual stocks, but the market overall. I mean, if this takes off and we see more events like this, we could see we could see them targeting individual institutions. and really doing some damage to these people. And that's why you would see some sort of regulatory crackdown on free speech when it comes to financial markets. If the big players keep feeling the pain from this sort of coordination or communication between the little guys, then there's going to be a crackdown, but that will not be the end of it. I don't know what comes after that, but we're very much in uncharted waters, is what I mean to get across. This is a unique phenomenon, and I cannot be entirely certain where we go from here. I mean, perhaps this, could lead directly into the final collapse of our financial system, which, as I've been saying for years, can come at any time. Things are not stable. If Wall Street gets spooked enough, if the Fed, if the Fed can be exposed as being somewhat impotent, although this is somewhat divorced from that, because I would argue that this whole GameStonk phenomenon is a result of the Fed's policy. But what I'm getting at is more of a social psychological question. Is the narrative of Wall Street being broken? Even if it's to the upside, even if it's to say that, hey, Wall Street's wrong, we're going to make this stock go up, which goes along with the general narrative of stocks always go up no matter what. Because once people start questioning the Wall Street narrative on one thing, they're going to question it on other stuff. And so when Wall Street says, hey, stock always goes up, the markets always go up, in the macro sense, perhaps people will start to question that too. Imagine if retail decided one day on Wall Street bets that they're all going to go all in and buy SQQQ, which is that is an ETF that has a 3 times leverage short position of the NASDAQ. What if the retail investors realized how what big of a part of the market they are, and they took that and they leveraged it up 3 times, and they all just went and bought Robinhood and bought SQQQ with every penny they had? They could bankrupt the Wall Street casino overnight. And if not overnight, over the course of a couple of weeks perhaps. Because even though they wouldn't move the NASDAQ nearly as much as they've moved GameStop, they wouldn't have to. A 10% correction in the NASDAQ would be enough to make a statement. It even perhaps would be enough to start triggering certain other mechanisms that would lead it into a downward spiral. The possibilities here really are infinite, and I'm intrigued, and I will be monitoring. I think I'll probably be monitoring r/Wall Street bets pretty closely from here on out. So with that said, if you gained anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do subscribe, because I do upload every day and I hate to have you miss one. So I'll see you folks back here tomorrow.